So we meet again. Hi everybody. Hello. How you doing? This is your host Marji, and I will be taking you on a trip of 3 hours a day, just like we have been doing every day recently, in order to explore the best trading opportunities in the market. How are you doing? I hope everybody is doing great. I hope everybody had a good trading day in the past 24 hours, because some things happened. Some currencies, some trading instruments traded as expected, and that is what we are going to be talking about right now. So first of all, I want to welcome you, and I want to say thank you to everybody who's been with us all this week. We are approaching the end of the week. It's a good week so far. Not a lot of huge movements in the market, but it is a good week. We are making profit on several trades, and we are waiting for that big move on some of the instruments that we are trading, that we are analyzing every day. Up until now, the moves have been modest, not the kind of moves that we really need to get that excitement and rush that we get from a market. But of course, we are still hoping for that to happen very soon. Maybe before the end of the week, we're going to see something that is really exciting. So guys, with that out of the way, first of all, of course, I want to remind you that this free webinar is sponsored by QTimeFX, our favorite forex broker in the whole world. And why it is our favorite forex broker in the whole world? Well, to begin, we have the reason number one. The lowest forex spread broker of 2018 is the award that QTimeFX has, and I really hope they get it again in 2019, because guys, they are offering you unbelievable spreads. Only 0.4 of a pip on the euro dollar and the dollar yen. And of course, that comes with absolutely zero commission, because if we give you fantastic spreads and then we charge you commission, then what's the use? So that's not how QTimeFX does things. You know, they are doing it in a way to make it easier for you to make money, to make it easier for you to get in, get out of the market with ease and with very low cost. And of course, cost of trading can be spread, commission, or other. And with these spreads and absolutely zero commission, you cannot go wrong having your account with QTimeFX. And of course, that will help you get in, get out, make money, make profit. We don't want to charge you too much. That is why QTimeFX is our favorite broker in the world. And if that was not enough, they are offering you guys $500 of real green money. Not only, you know, a credit there in your account to trade with, and then we say to you, well, we need to get it back. Not like that, but it is real green money, and you can withdraw it. It's a withdrawable bonus. This is the magic word. The magic word here in this advertisement and in this offer that I'm giving you on the top of this webinar is that your $500 free bonus is withdrawable. So don't waste any time. Contact us at fx_educas via Telegram, and let's open this account for you. Okay, guys? So, very happy to have you all here. Let's hit the charts immediately. We don't want to waste any time today. We want to talk about the charts, about trading opportunities. We're going immediately to the chart. And as usual, we're going to start with our beloved euro, or at least your beloved euro. I know you guys love the euro. A lot of you love the euro. A lot of people are trading the euro, asking me all the time about the euro. Although recently it has not been as exciting. The moves have been extremely limited, not really exciting, not the kind of move that you want to see on the most traded pair in the whole world. So yesterday and the day before and last week and for almost two weeks, we have been talking about one level, 109.95. We have said that this is the support that we need to watch. And this has been said every day for the past 2 weeks, even when we were closer to 11. We said that dropping to 109.95 would be exciting and that it would give us an opportunity to re-establish long positions. And this is exactly what is happening right now. Guys, every day for the past week or even since last week, we were getting closer and closer to 109.95. And finally, yesterday, we touched this level. Yesterday's low, it was the lowest price since October 15th, which of course makes it a 4-week low. It was 94. 94, guys. Look at this accuracy. Let me. 94. Okay, the low is 109.94. This is yesterday's low, 109.94. And again, today or during the agent session, the low is also 94. We are still extremely close to this low. We are now 1 pip, 2 pips above it, and we are trying to recover from it. Or honestly, we still need to see that the bulls are trying to recover from this low, from this very important support. Before we talk about what possibilities do we have away from this level, first of all, I want to remind you why we are so interested in this level, because some of you guys are here probably for the first time, or they have not been here yesterday and the day before. Some of you have and will remember what I'm going to say. But for the new guys, let me remind you why 109.95 is our favorite support for the time being. First of all, it is the Fibonacci 61.8 retracement level for the whole recovery attempt from the 29-month low, which was seen early in October, up from that low. On my chart, it was 108.78. Of course, it's different, 1-2 pips. It's going to differ between one trading platform to another, one charting platform to another. On my chart, it is 108.78, up more than 300 pips from that low. That is what the bulls did after reaching a 29-month low, giving hope to the euro. So the euro is doomed? Maybe not. The euro is under pressure. It has been under pressure for a long time. The question is that pressure over? So one of the things that happens after a recovery attempt is retracement. And these retracements, when they come in the form of 3 waves and bottom very close to key retracement levels, that is when they mean something. They mean a lot if that happens. Is this happening here? Up until now, we are finding support at the 61.8 retracement level for the whole recovery attempt from a 29-month low. And the drop from the high seen after reaching that low, which is this top here, the drop is obviously a 3-wave sequence, which adds to the bullish possibilities, because when you have a 3-wave sequence pointing to the downside, once this sequence is terminated, the price will be expected to start recovering or to resume recovering, and this time it will be expected to go beyond the previous top that this drop started from, which is in our case 1183. So survival, first thing I want you to note, I'm going to write on the chart, is this: survival at 109.95 means there is a good possibility of a new recovery high above 1183. So this is the first thing I want you to note. Keep this in mind. If we survive here, the recovery should, of course, given enough time, should reach above what we have seen in October, 1183. That was October's top, or the monthly high for October. It was a very impressive recovery attempt, and it reached 1183. Now, survival here means we can reach a higher high. And when you do reach a higher high, of course, the very simple trend analysis, higher highs and higher lows, of course, mean that we are moving to the upside. And the first step towards making that happen is a higher low here. We have a low, of course, at 108.78. If the next major low will be around 109.95, like what we are seeing right now, then that means we have a higher low. This is step one towards an uptrend. Now, if we start recovering from this higher low and reach a higher high above last month top, then we will be enjoying the atmosphere where we have a higher low and a higher high. Higher lows and higher highs mean one thing: uptrend. And I really hope that happens. But it all depends on the support that we are testing right now, guys. 109.95, major support from a technical point of view. If you look at the technicals, they are all over the chart. They are saying this is an important support. The first thing we talked about, of course, is that 109.95 is a major Fibonacci level, probably the most important Fibonacci level for the recovery attempt seen in October. Is there another reason why this level is important? Of course there is. The reason is this Fibonacci level is only pips away from the psychological level, $1.10. And you know, traders, they love the numbers. They always try to understand them in their own way. So that's why we have psychological levels now, which when we are trading above or below, that can change how traders look at the situation in the market. One of these levels is definitely $1.10 because it ends with a lot of zeros, and that is, of course, something that affects the psychology of trading. It's a major level from a psychological point of view. The next major level is parity. So if we cannot hold above 110, then everybody will start thinking about parity, when the euro will be equal to the dollar. So parity is the next major psychological level, which means that the level that we are testing right now is the last level before parity. How important is that? Right, guys? It's a very, very important psychological level. What else? We also have more reasons to believe that 109.95 is the support to watch. If you go back to what the price did while trying to recover, we started moving to the upside after reaching that low, of course, that 29-month low here. This was the lowest price in more than 2 years, and almost 2.5 years. So that gotta mean something. Once we started recovering from this level, we found resistance around 109.95. And of course, at the same time, around $1.10, that psychological level, which is here. So see how close these tops are to the psychological level and to this Fibonacci level at the same time, because they are very close to each other, of course. I have talked about these daily highs in previous webinars. I'm going to mention them again. October 3rd high, 109.99. October 4th high, also 109.99. October, 4th high here, it is 99 here. Here's 7th. October 7th high is 10.01. October 8th high is 96. Very, very close. We also have 91 here on October 9th. We do have 93 here on October 9th. And after we started trading above this level, also we found support. For example, October 10th low is 10.01. October 11th low is 10 exactly, $1.10 exactly. And October 15th, a very important low from technical point of view. October 15th low was 989. Why is it important from technical point of view? Because the last part of this recovery attempt started from here after an obvious, let me point it out for you, after an obvious 3-wave sequence to the downside. This is an ABC. Of course, after an ABC, another leg to the upside started, and this is the start of this last recovery, the last part of the recovery attempt, 989. And after that, of course, we started trading away from this level, above it, obviously above it, until recently we came back. As you can see, in the past few days, we came back to our beloved 109.95. November 8th, we were not that close. The low was 15, but which was, of course, last week. This week, we got much closer to it. So on Tuesday, the low was 10.01, and on Wednesday, the low was 9.94 yesterday, and the current low for today is also 9.94. So I really think that the market's trying to tell us something, and that thing is how important 109.95 is. That's why we are going to continue to depend on this level in our understanding of the market. What do I mean by that? I mean, we need to understand that above or below this level means two different things. If we keep trading above it, the bullish possibility and bullish potential will continue to be, and not only to be, but to be the favorite. Why is that? Because we do have a recovery attempt to the upside, we do have a 3-wave sequence to the downside, and we do have a bottom extremely close to a key Fibonacci level. All of these things are pointing to the upside. Okay, guys, but that will change, will completely change once we break below 109.95. I hope it does not happen, but if it happens, I want to be there. I want to be ready to take advantage of more weakness. Okay, so guys, we're picking a side in this fight, but with condition. I am Euro bullish with a condition that we hold above 109.95. If we break 109.95, I will stop being a Euro bull immediately. But of course, such important levels are not considered broken with 5 or 7 or 8 pips. I don't want you to jump on the short side of the market prematurely. That's why we are giving this key level more flexibility. So we are not going to consider that it's broken before we see a minimum of 25 pips below it, and I prefer 30 even. That's why our first recommendation for the day will be to sell Euro at, let's say, 30 pips below 109.95. That means 109.65. Okay? It makes sense, of course, once we start trading below this support that showed a lot of strength here on the way up, on the way down, and recently. It's a Fibonacci level, it's a psychological level. So once it's broken, short position will be 100% justified. Okay? Now I want to see where is my stop. And of course, as always, I'm going to give you 2 targets. I used to give you 1 target. I got feedback from you guys. A lot of traders prefer 2 targets. Give us 2 targets and let us decide on which one we want to go with depending on the market. And that is something I really respect. Okay, if you want to take that responsibility and make the decision, of course, go ahead and make it. So I'm offering you 2 targets, guys, on every trading recommendation. Our stop should be above the falling trend line, this falling trend line. The blue one, I really believe that we need to pay attention to it, but I'm gonna still try and find another trend line that makes sense. Actually, we do not, because if we draw a trend line from previous tops, last week's tops, we will be already trading above it. So I want a trend line that I'm still trading below in order to consider it my resistance for now. And of course, as you can see, guys, if we draw a trend line, a falling trend line from last Thursday high, exactly 1 week ago, last Thursday, now we are it's a Thursday too today, so this was exactly 1 week ago. This trend line is currently running around 10.06, and what is also exciting, let me show you, is the fact that the moving average band on the 1 hour chart, the hourly chart, is also very close to this trend line. And as you can see, the moving averages are dropping. They are sloping to the downside, of course, because the price itself has been dropping to the downside. So this is natural, of course. And what really interests me here is that by dropping, maybe a few hours from now, 2 hours, 3 hours, they will be touching this trend line. So I am going to consider this trend line to be my resistance. And it is, of course, it's very, very close to where we are trading right now. The highest price seen in the last 3 hours was 10.05. That's why this level here, I'm gonna, and of course, as you can see, it's extremely close to that trend line. The next hour, it's going to be exactly at 105. After we close this hour, 37 minutes from now. So 105 is my resistance. 105 is my, 10.05 is my resistance, not 105. I hope we don't see 105 for a very long time. So I want to be on the long side of the market, and I want to stop my short position if we start trading above 10.05. How about 10 pips above that? 10.15? Yeah, a sell at 65, a stop at 15, a stop of 50 pips. That is very, very nice. Of course, I'm talking about from a risk management point of view. 50 pips, that is the kind of stop that will not hurt much if it's hit. Not like 150 and 200 and 250 pips of stops that some traders use, which is almost unbelievable. Who wants to stay in the market while they are still losing 50, 70, 90, 100, 120, 150, and they are still waiting to say, no, my stop is not hit yet. I see this happen all the time, and it's a very expensive way to trade. So don't do that, guys. Keep your stops preferably between 50 and 70 pips. And if you need to push them a little bit more than that, up to 90, 95, sometimes, not all the time. Don't do that all the time, but sometimes it's okay. But never ever use stops that are 200, 250 pips, because one stop can cost you what you made in 6 or 7 good trades. Maybe you're making 40 pips, 35, 50 pips on your trades, and then one stop will take away 250, will take away your work for a whole week. Do you want that happening to you? I know I don't. I don't want that happen to me. Never. So I want to, okay, making 40 pips, 50 pips on trades is good. If I make 100, I'm a very, very happy man. But that means that I also need to keep my stops within this range. Right, guys? Don't you agree? I hope you do. Now, what about the targets? Of course, we talked about this yesterday, 109.03, and I'm going to show you why these are my targets. These are the same exact targets from yesterday. I'm going to show you why they are very important. First of all, let me delete this. First of all, guys, 109.03 is a support that proved itself in the past here, as you can see here. These daily lows and session lows were extremely close to 109.03. If you draw a horizontal line around these bottoms, you're going to reach the conclusion that 109.03 is the next support. of course, after breaking 109.95. We do have some support in the middle, expected in the 40s around this bottom right here, but you know, 109.95 is an important level, and if it's broken, I really doubt that we're going to drop only 30 or 40 pips, maybe 100 or something like that. That's why from 109.95 to 109.03, that makes a lot of sense. 92 pips between this support level and the next support level, because this one is a major support level. It's very, very important. Okay, what about 108.14? Well, it's a long-term retracement level. This is the Fibonacci 78.6 for the long term. And that is why we are going with these numbers as targets for our short recommendation. Now, what about the bullish possibility? Well, it's very simple. If we start trading, guys, let me make it extremely simple for you. And you know me, I make money in this market by being simple. You don't have to overcomplicate things. Don't do that. Keep your analysis simple is one of the greatest advices that I have heard when I was just starting this business, and I really believe in keeping your analysis simple. You don't need a very complex system in order to generate good trading recommendations or good trading opportunities. What you need to do is this. You need to spot the most important resistance, the most important support, and you need to act on the break of these levels. So to me, I decided on which support and resistance I want to use for the day. Above the resistance I'm buying, below the support I'm selling. Very, very simple technique. Anybody can do that, but of course the skill is in identifying the most important support and resistance levels, because we have many support, many resistance levels. Which one are you going to use? This needs a lot of education. It needs a lot of understanding of the fine art of technical analysis, and of course it needs a lot of experience. With experience you're going to get better. If you are new in this business and you are still struggling to identify support and resistance levels that mean a lot to the market, don't worry about it. Just keep trying, keep gaining experience, read as much as you can of technical education, books, courses, webinars, anything like that. And I'm sure given enough time, you will get there and you will be the kind of analyst and trader who can easily spot the most important support, the most important resistance for the day. And then of course you can build your strategy on these levels. So my resistance is this one. We are extremely close to it. I want to see the price trade above 10.05. 10 pips above that is enough for me. And that is why I want to place an order to buy at 10.05. 10.05 is the resistance, so I want 10 pips above that, so it's 10.15. Not sell, it's a stop. It's still 8 a.m. here, so I'm still warming up. 109.65, guys. Now I'm going to give you two targets. Target 1 and target 2. Target 1 is usually going to be between 30, 45 pips, something like that. This is because of the feedback I got from you guys. I usually aim for more when I issue recommendations to my clients, and I have been doing since 2003. I have been writing technical analysis reports, issuing market analysis, issuing trading recommendations and signals since 2003. And when I do that, I always aim for more than 30 or 40 pips. You know, my limits are minimum 70 to 80. Sometimes they are above 100, depending on the situation in the market. But of course, I appreciate, I understand, I completely understand the request that I got from some of you guys to give smaller targets. I'm going to give you I'm going to give you a smaller target and a larger target. So what is our smaller target for now? One of the ways I'm going to use to identify what targets we should use with this long recommendation is retracement levels for the whole drop. This C wave Of course, we are considering it to be C at the moment, but if it keeps digging better, lower, and if it develops in a five-wave sequence, then we cannot actually C is a five-wave. But if the whole drop, this is what I'm trying to say here, if the whole drop develops in a five-wave sequence, not three, then things will be extremely bearish. But for now, we are still above 109.95, above or around it, of course. Even if we get 5, 10, even 15 pips below, that's okay. It's a real world. It's not a book here about technical analysis or trading. It is a real life situation. This is the real world of trading. So it's okay to have the price sometimes penetrating major levels before turning to the other side. So here, once we start trading above this trend line, I will be expecting the price to at least reach at least one of the retracement levels for the whole drop, this whole drop from October 31st high, which in my opinion is wave C of a three-wave sequence to the downside. So I know that some people use 23.6% or 1/3 the Dow ratio. To me, I prefer to start with the 38.2, and I really neglect levels that are lower than that, because the targets, if you use these levels, the targets would be extremely small, and I don't want you to target 20 pips or something like that. So if we buy at 15, our level here is 1063, and my God, do you remember what was the support area before we got to 109.95? The support area we used to talk about all the time, it was 1063 to 1086. So having this first Fibonacci level at 1063, it's just an attractive number to us analysts, because we considered this exact level to be a support on the way down. Now we are expecting it to provide resistance on the way up, which makes absolutely perfect sense from a technical point of view. Okay, so that's why I am definitely going to recommend 1063 as an initial target. How much is that? 48 pips. Yeah, it makes sense. And target 2 is going to be the top from which this three-wave sequence started, which is the 2-month low seen on October 18th, 1183. And that's it, guys. This is it for the euro for now. I have a long at 1015 with a stop at 109.65, initial target 48 pips at 1063, and a more ambitious target with around 168 pips at 1183. The second recommendation for the day is a reverse of the first. If we get to 109.65, we sell with a stop just above this trend line here at 1015, and our initial target is 109.03. that means 62 pips, and we have a more ambitious target around 150 pips at 108.14. I am going to, before I take a look at your comments, let's wrap this euro thing with placing the orders. Want to place these orders, guys? Of course, when you are trying to get in the market on a break of an important level, you're still not breaking that level, then all of your orders will be entry stops, not entry limits. So you have to pick buy stop. If you want to buy at a higher level than what you are seeing in the market right now, we are at 109.96 right now. I want to be long at 1015 with a stop at 109.65 and a limit at 1063. That looks like a fine recommendation, a fine trading position that I really look forward to. I really hope that this order will be triggered. Okay, so take a look at these numbers, guys. 1015 is our entry for our buy recommendation for today. 965 is our stop. 1063 is our limit. And place. Here you go. Now, the sell recommendation, of course, it is also a sell stop, not a sell limit. The sell is going to be an exact reverse. So we get in at the stop of the buy recommendation, 109.65, with a stop at 10.15 and a target at 109.03. And I place, and there you go. Now I am ready to take advantage of a move to the upside if we break above 10.05, or a move to the downside if we break below 109.95 in a clear and clean way. What do I mean by that? I mean, I need to see real action below that level. So that's why I did not place my order to get in at 109.85, for example. No, I made it a little bit further in order to give this level some time to work out. Maybe it's going to result in a bottom around this level, 10 pips below it, and we'll come again tomorrow and we will be talking about, did you see that low? It was very close to 109.95, only 10 pips below it. We don't want to be short if that happens. But if the market pushes lower than that, then that's it. That's why I'm placing my entry 30 pips below 109.95. So this is it, guys. But of course, I wanna talk about what happened to yesterday. Recommendations, and I wrote them down here so I don't forget any recommendation that I issued yesterday. We had a long at 10.28. This was the first recommendation, and a short exactly where we are placing it today at 9.65, and the price did not touch either of them. Okay, so we stayed below 10.28 and we did not touch 9.65. So yesterday, 2 recommendations issued, but none of them triggered. Okay, that means we are flat on the euro from yesterday, and we are really hoping for one of these recommendations to be triggered and to reach its limit today. Keep your fingers crossed. Okay, guys, so with this, we end the euro. With the part of this session that is dedicated to the euro is now over. And that gives me a chance, guys, to take a look at your comments. We have Maritas. Well, that's a name that I just heard of. I don't believe I got any comments from you, Maritas Ferrara. Hello, and welcome to this session. I hope you enjoy it and find that we are giving you good advice. We are helping you achieve profit in this market. I really do hope that this is the conclusion that you will be reaching after we finish this webinar today. Mona Lisa, wow, what a beautiful name! And Mona Lisa with a Z, not with a S. Well, that's pretty special. Hi, Mona Lisa. Georgios, my buddy. Georgios is coming back, and he's one of our viewers who is always there enjoying what we are giving them. I'm very glad to see you day after day here getting these recommendations. So hi back to you, and Harry as well. Harry, buddy, how are you doing? Hello, Munther. Hello, Harry. How are you doing? I hope you're doing great. I hope you are ready to make some money today. I hope you are placing these recommendations on your real QTime FX account. Are you? Let me know. Aaron, hello. Hi, Aaron. Jaco is coming back. Hi, Jaco. How are you doing, buddy? Now, Georgios is saying, thank you, Munther. Yesterday, I got 21 pips from Eurodollar. Fantastic, buddy. That is fantastic. I really hope you make money every day. And we do have Brian with us also, Brian Costa. I'm not sure, but I really think this is the first time that Brian is with us. So if you are new here, guys, let me know. And of course, I'm going to be joining the chat here, and I'm gonna be leaving you my comments. Hey, everybody. Hey, everyone. Oh, we have another comment with us. Affinity. Hey, everyone. Let me join. I'm logging in on my YouTube. Yeah, that's great. So, okay, I just joined. Hey, guys. Welcome again. So I'm one of you guys right now. I'm just chatting with you with Maritas, Mona Lisa with a Z. I like that. That's pretty special. Georgios, Harry, Aaron, Jaco, Affinity, and now you have me with you guys, Munther. Hey guys, welcome again. We have Julie. Oh, Julie. And Brian, of course. Hi guys. So thank you very much for being here. Thank you very much for the people who are here for the first time. Welcome, welcome, welcome aboard. We hope you like this ride towards profit. And for people who came back from previous webinars, then I'm really proud to have you here. I'm really happy that you found something that you really liked and you are coming back. I really like that. So you guys, I'm here with you on the chat. I will be posting, I will be writing comments, and I just enjoy being one of you guys. Okay, now before we take our first break of the day, what I'm gonna do here is I'm gonna adjust. Bear with me here. Sorry about this. I'm going to adjust the link to the chat so it appears in the video and I can see. Yes, now it's working. Fantastic. Fantastic, guys. So now it is working, and yeah. Okay, so guys, what is happening in the market right now? I think the bears are trying to push a little bit below 109.95, and of course, you know, just a little bit is okay, but we don't want the price to be pushed really below this level. I want us to be around this level. Even if we trade a little bit below it, it's okay, of course, but not too far. If we get too far, then we will have to admit that 109.85 did not save the euro, and the euro is going to continue dropping, just like it has been doing since late last month or the beginning of this month. For the past 2 weeks, almost 2 weeks ago, we were extremely close to 112 level. Now we are pips below the 110 level. So can this weakness go on? Of course it can. But it all depends on 109.95. We have a great opportunity to survive here. And I really hope that the bulls will use that opportunity in order to attack this market, to make some profit, to make gains, and that the single currency will not crash below this level. It's a key support, and it's not about taking sides, guys. I know that some of you think that, well, Munther must love the euro and hate the dollar. Of course not. That's not why I'm hoping for a move to the upside. It's because of the technical setup. And when there's a strong technical evidence on the chart supporting one side over the other, of course, I'm going to be rooting for the side that the chart supports, because I'm a chartist first and foremost. I love nothing more than the chart. When I want to trade, I go to my chart. I know some of you guys will go to the agenda, of course, or read articles, or there is a number of things that you can do before you get in the market. To me, the most important thing to do before I get in the market is to take a look at the chart, and I really recommend you doing the same. Of course, taking a look at news, what is happening in this world, what news affect what you are going to trade. Of course, that's a great idea. I'm not saying that you should not do that, but what I'm saying is that your main decision-making tool should be the chart. I really hope you agree with me. Do you agree with me, guys? Let me know what you think of this. I really want to engage you in this question. Do you believe that technical analysis and chart is enough to make trading decisions? Yes or no? Please let me know. And if you do that, let me know. If you depend on news and agenda, also please let me know. So I just left this on the chat, guys. And of course, good morning, Munther, coming from Ethan, my buddy. Thank you, buddy. Good afternoon to you. Now, question for discussion. I have just posted this. Do you guys believe that the chart should be the main tool for trading, or do you use fundamentals? Where do you make your decisions, on the chart or on the economic agenda? Let me know. First, let me know what you believe in, and I also want to know if you apply that, because a lot of times some traders say, well, yeah, I believe the chart is the best thing to use, or I believe that the news is the best thing to use before you decide on which direction you're going to go in the market, where to buy, where to sell. But there they come back to me and say, well, but I don't use it all the time. Sometimes I get in without looking at the chart. So let me know, guys. I want to hear from you. First of all, which one do you prefer to use? And do you use it all the time or only sometimes? Some of you guys can be trading without looking at the chart. If you do that, please let me know, because I need to talk to you. Okay, guys. So we are ready for the euro. We don't have enough time to start talking about another instrument before the break, so I'm going to take the break a little bit early, 5 to 10 minutes earlier than usual. I'm going to take my break right now. Our first break of the day is going to be a short break, and we will be coming back, of course, to talk about the market and other trading opportunities. Gold is next. If you like gold, if you like shiny things, and then stick till after the break, because we're going to talk about the precious metal immediately after the break. And of course, if you have any markets you need analyzed, any markets you need a professional look at, then I'm here for you guys, and this is my agreement with you. I'm going to do that with a smile on my face. So just ask for it. which currencies, which instruments you want to see analyzed in front of you, and I am here to do that with all my education and experience, just for you, to serve you, to show you the best opportunities in the market. So don't hesitate to request any market analysis. Okay, guys? Thank you very much for being here in this first hour. I'm going to take a break of 5, 6, 7 minutes, something like that, and I will be back. And meanwhile, of course, it is my opportunity to give a huge thank you to QTime FX, our favorite broker in the whole world. The broker who got the award for the lowest forex spread in 2018, and I really hope they get this award again in 2019, because they deserve it, guys. QTime FX deserves this award, and I'm rooting for them in 2019 as well. Imagine yourself trading with only 4/10 of a pip on the euro dollar and the dollar yen. That means any kind of movement that happens in the market, you'll be there to take advantage of. If the market moves 5 pips, then you will be making a profit of 4.6 pips, and your broker will only charge you 0.4 of a pip in a spread. How beautiful is that? How fantastic is that? To me, a trader who traded with many brokers for 19 years, I really believe that this is fantastic. This is a great thing to have as a trader. And of course, if you search the internet, you're going to find many brokers with attractive spreads, but some of them will come back asking you to pay commission. So they say, well, yeah, we'll give you the same spreads as QTime FX, but we have a commission of $5, $7, $10 per lot, something like that. So where does that leave you? Of course, it leaves you where you were before using these very attractive spreads. Do you want this happening to you? I know I don't want this happening to me. I want to trade with a broker who is giving me these fantastic spreads, but not punishing me with commission. Okay, guys? That's why my real account is with QTime FX. And if that was not enough for you, we are offering you to try our services and get $500 of free bonus. $500, guys. Not trading credit, real money, green money, money that you can withdraw. This is the magic word, withdrawable $500. Not just there in your account and then we'll take them away from you. No, we do not do things like this at QTime FX. We are offering you $500. So come and get them. Come and enjoy them. Enjoy these spreads, enjoy the bonus, and enjoy trading with absolutely zero commission. Contact us at FX_educast via Telegram, and we will be extremely happy to help you with every step of the way in opening your account. So let us know if you want any help, guys. FX_educast via Telegram. We are there to help. Okay, guys. So this is it for the first hour. We talked about the euro. After the break, of course, we're going to talk about other instruments. So see you in 5. Okay, guys, so we are back after this short break. Welcome, everybody. How you doing? Hope you're doing great. I hope you are ready for our next and second hour of today's webinar, our next trading opportunity, our next recommendation, our next analysis. We are going to take a look at gold right now. And of course, I'm going to take a look at other instruments later. That's why I want you, if you are interested in any market, just let me know which one it is, and I will be analyzing it with a smile on my face. This is my promise to you. Okay, guys, so let's hit the charts immediately. So gold. Yesterday, we talked about, let me switch this maybe to 4 hours, that would be better. All right. All right. So guys, yesterday and for the past few days, we have been talking about a complex correction possibility. This is the possibility that I believe is the one to care about when trying to establish positions on gold at the moment. So after reaching a multi-year high in early in September, we had a three-wave sequence to the downside, but it was very, very small compared to the size and duration of the previous move to the upside. That's why when this happens, what we expect is to have a more complex correction than just an ABC. Okay, guys, so we do have one part of the correction as an ABC, and then we have an X wave, and then another part of the correction. Then the second part of the correction is very, very exciting. Why is that? Because it is also an ABC, and inside C, I really believe that we have a very good wave count, a very bullish wave count that is pointing to the upside. But up until now, yes, yesterday we achieved modest gains, and in the past 48 hours we achieved some intraday gains, but in my own opinion, we are not seeing what we should see. We are still struggling with going back to the 70s. We have not touched 70s for a few days right now. So for how many days? When was the last time we traded above 70? Let me see. This is the 70 landmark, and it was on the 8th of the month, 6 days of not trading above 1470. Now, the last part of this correction to the downside, this is what I really believe. I believe that the correction is to the downside. So the last part of this correction to the downside is the wave C of the second three. So we have a 3 here, X, and we have a 3 here. Now wave C should be the final. It should be the final part of this correction, and I hope I'm not facing some network problems. I really hope I am not. Yeah, okay, things are okay now. Sorry about that, guys. Okay, so the drop from the top of wave B comes in 5, 1, 2, in my own opinion, this is 3, and inside 3, the 5 waves are pretty obvious. We are getting smaller with the waves, so 5 is smaller than 3, 3 is smaller than 1. That's okay. We are not breaking any rules because 3 is not the shortest. And of course, now wave 4 is something that is small but sharp. It's very similar in size to wave 2, but it was faster. Wave 2 took more time. It was faster, so this is some kind of alternation, which is of course something that should happen between waves 2 and 4. And after that, wave 5, guys. Wave 5 is very interesting because we have 5 waves to the downside that are very obvious. and they obey the rules of Elliott very well. One of the most important things for me was that wave 4 does not travel above the bottom of wave 1 here. Bottom of wave 1 was 57.65. Here, wave 4, we got to 56, but we did not get above the bottom of wave 1 here, as you can see in this horizontal line separating the bottom of wave 1 and the top of wave 4. And after that, we had the final move to the downside. And after that, of course, the price started recovering. One of the most beautiful and interesting observations on the chart is this one. Let me show you. Maybe I will need to go to the daily chart for that. It will make it easier to see. I'm going to use retracements. I'm going to calculate the retracements for the whole move from April bottom up until the highest price seen in many years, which was seen in September. As you can see, it has been a long time since we traded around these levels. Go back further in the chart, and you can see that it not traded at the levels we saw in September since 2013. So that is 6 years, guys. More than 6 years actually, because that was April of 2013. So we're talking about almost 6.5 years. And after reaching that, of course, the price started correcting to the downside, only to find support at the Fibonacci, almost exactly at the Fibonacci 38.2 retracement level for this whole gigantic move to the upside from around 1266 to around 1557. My God, we're talking about thousands of pips, just a little less than 3,000 pips. And then we started recovering. We started correcting. The correction was complex. One part of the correction is here. It's the ABC. It can be seen here, and of course an X wave in the middle. And after the X wave terminated, another ABC to the downside. And all of this, guys, let me say probably came to an end extremely close to this Fibonacci level. This Fibonacci level is 46.06 if you want to be extremely exact and precise. 46.06. 2 buy recommendations. We had 2 buy recommendations yesterday. One of them was at 1455.7, and of course we did not drop enough to trigger that. The other one was a buy at 1464.1, which of course was triggered, and I think we reached the maximum floating profit this recommendation reached was 30 pips. I hope you guys got away with that. If you did not, you can close it right now with around 9 pips. 9 pips of profit at the moment. It reached maximum of 30. Of course, it stayed completely away from its stop level. We did not even come close to the stop. Everything was okay for this recommendation, but the kind of move that we were waiting for to the upside was not there. It was a small move, 30 pips to the upside, and that's it. I really hope that today we can see more than that. Okay, so if you are long from 1464.1, depending on yesterday's recommendation, of course you need to close it right now and wait for the fresh recommendations. At this exact moment, it's this recommendation is making around 12-13 pips. So congratulations on this very small profit, and we hope that today we are going to make much more than that. So let's start analyzing. This is a 5-minute chart. No. I want to start at the daily chart and look at the indicators. and I am going to delete all the drawing tools here so I can focus. Okay guys, so as you can see, this candle by itself is bullish. The place that it happened at is bullish because it's a Fibonacci level around 1446. And this confirmation to the upside is also bullish. So everything on the chart is screaming that gold is going to the upside. And I myself, my clients, and everybody who asks me about the market is positioned to take advantage of a move to the upside on gold. Keep your fingers crossed. If things move as expected, I will be making some good profit. And I hope that you guys will be making the same. So we are for a second day in a row. I'm not going to give you a short recommendation. Maybe I will, but I don't prefer to give you short recommendations under current market conditions, especially that we have this doji, the bottom of the Fibonacci level, the confirmation here. And let's look at the indicators, and we can easily see a bullish cross here at the stochastics. RSI almost touching the oversold and moving to the upside. MACD is not giving me any signals here. Let me switch to the 4-hour chart and read what the indicators are saying. Well, here it is not very bright as I want it to be. I really want the 4-hour chart to show me more strength. Why am I saying that? First of all, the stochastic is already in the overbought area. The cross on the MACD happened. Yes, this is good, but it was not recently. It was not in this candle or the one before it. It was several candles earlier. RSI is still pointing to the upside. This is good. So we have good and bad in the indicators on the 4-hour chart, but we have one specific observation that is really bothering me here. I really want to see gold traveling hundreds of pips to the upside, but that cannot happen without breaking above the moving average area. This moving average band area, as you can see, we came close to it yesterday, did not touch it. Today we are trying to break it, and I really hope we do, because a top inside this band will be very harmful for the technical outlook. If we top inside it and start falling, then that would really ruin the party. You know, no more party for the bulls. And I'm gold bull today, so I want the party to go on as long as possible, and I want to have you guys with me in that party. So what we need the market to do in order to continue partying is to clearly penetrate and break above this moving average band. We are already inside it. This moving average band starts around 66 and stretches up to around 75, 90 pips. That's a wide area. Of course, it's a wide area because it's a 4-hour chart. If this was an hourly chart, the distance between the two moving averages would be, of course, smaller. But for now, we have an area of 90 pips that we need to overcome. It stretches up to 75. Up until now, we're not doing very bad, but we have a lot to do. This is what is worrying me. We need a lot. We need the bulls to do a lot before we can enjoy trading above this moving average band. Now, what about the hourly chart? I'm going to focus on the chart for your sake here. On the hourly chart, it looks better. Why is that? Because we have been trading above the moving average band for a while, which is great. Not only traded above it, but we are trading above it one candle after the other. Above, and even with these small drops to the downside, they are finding support very close to the moving average band. I like that very much. Look at this. I like this extremely much. I like this very much, finding support inside the moving average band, and here finding support just above the moving average band. Both of these observations, in my opinion, are bullish. Another bullish observation is, of course, the direction that the stochastic and RSI lines are taking to the upside. We have a cross here, although it did not happen in the oversold area, but it happened. It's good. After this cross, as you can see, the price has been rising, and it already rose around 50 pips after this cross from around 62 to around 67. That's good. That's very good. And that is why the hourly chart is more pleasant than the 4-hour chart. So now what we need to do is we need to specify what resistance and support we need in order to build our trading strategies for the day. And I'm going to focus on the chart in order to do that. Let me see if of course, we are trading above this trend line right now. Fantastic. This is good. This break is fantastic. It happened early yesterday, but as you can see, the reaction is still limited. I want to see more reaction to the upside. I want to see the bulls working hard to prove that this is their market, because it is their market. At least it should be their market. That's what the chart is saying. That's why I really hope the bulls will attack the bears today, and they will achieve a lot. So I cannot use this trend line to find resistance. What else can I do? Maybe retracements. Let's see. Retracement levels for what I consider to be wave C, the last wave of a falling correction. We don't have very close retracement levels here, which make it harder. How about this? How about this? Or maybe this, if I put it on the close here. Well, actually, that makes a lot of sense. As you can see, we have a close here, we have a low here, we have tops here that are very close to this horizontal resistance level. Also, we have a top here. Here, we are extremely close to it. Here, we are touching it, and now we are trying to break it. Where is this level? It is yesterday's high, 67.1. So resistance, $67.1. Great. So I found my first target that I really need to care about for the day, 67.1. What about the support? Now the support should be around this moving average area. The moving average area is between 62 and 60, almost 60. So I'm going to find, or try to find, meaningful levels that are very close to this moving average area up until here. Wow, that's very fantastic. The first Fibonacci retracement level for this very impressive recovery attempt up until now is 59.3. So I am going to use that as my support. And I'm going to build my trading strategy around these two levels. $10 pips above or below each of these levels should be enough. So we are going to buy 10 pips above this resistance, 68.1. Our stop should be 10 below the support, 58.3. 98 pips. Well, let's try to cut that by making the entry levels and the stop level 5 pips closer to these levels. That is a little better. So now 88 pips between the entry and stop. Now let's talk about the limits or targets. We call them targets. Target 1, target 2, initial target is going to be a small one. I'm going to use 80.8. I think that is good enough. Yesterday, the limit for our long position was 2.5. By the way, we did not get to that. We only got 30 pips. Today, I really hope that we are going to get to this limit. So we'll be buying in the 60s, hoping for the price to just touch the beginning of the 80s. 80.8 is our limit. That means more than 100 pips. So maybe I'm going to use that as a second target, and I'm going to give you a smaller target, guys. I know you like smaller targets. So I'm going to give you a target that is maximum 50 pips. 50, 70, wow, that's great. 72.5 is the initial Fibonacci level here. So we'll be buying at 67.6 with a limit at 72.5, which means, of course, 49 pips. That is the kind of target that you guys want. I'm giving it to you, but for people who want targets that are three-digit targets, and the ones that I really like, the 3-digit targets, not the 2-digit targets, we have 1480.8 as a limit. Okay, guys, so this is our recommendation for now. Let me just change the color here. I don't want you to be confused. I'm going to keep this here, along here, and I will issue, I don't know, I really don't want to issue a short, to tell you the truth. So I'm gonna keep only this recommendation for now. One recommendation for gold. I'm not gonna give you another recommendation that is short. No short recommendations today. Sorry about this. And if we did not see that this recommendation, the order that we are going to place, is triggered, then I recommend you guys buying around the support 1459.3 by 1459.3. Let's see where can we place the stop and the targets. We can use, of course, we can use retracement levels here. That's how we got 59.3 as support using this retracement level. Why we prefer this retracement level? Of course, because it's the closest one to the moving average band. Now, the 61.8 level is at 1454. 1454, how about 20 pips below that at 1452? That's our stop. Our targets, the second target, I'm going to keep the same target as the first recommendation, and as yesterday, I really believe we can get to 1480.8, and I really hope that happens today. But I'm going to give you a smaller target, and this target, if we got down to this area and then we start rising, I'm not sure, let me see. Nope. How about this top? 63.1. No. So I really cannot, or at least I prefer not to give you a limit. If we drop to this support area here and then start recovering, I prefer not to give you a limit below yesterday high, which is 67.1. So there you go, guys. And of course, as I always say, when I give you two recommendations in the same direction, what I need you to do is this. I need you to go with one of them, the one that is triggered first. You can place both of these orders at the same time, but you need to follow them, of course, because we don't want to be having two positions in the same direction. That, of course, will double your risk. And if you manage your risk in a good way, then you don't want that happen to you. So what you want is to follow the market. You place these orders right now, go ahead and place them, but immediately when one of them is triggered, I want you to cancel the other. If the price moves higher, only 10 pips from here, and this recommendation is triggered at 1467.6, then immediately go and cancel this other order. So place this order here. 1467.6 is your long, stop at 1458.8, initial target at 1472.5, and a more meaningful target, in my opinion, at 1480.8, guys. Or if we did not push these 10 pips we need in order to initiate this position, and the market drops towards this support area here between the moving average band and the first Fibonacci level for this recovery attempt, then we will be buying at 1459.3 with a stop at 1452. Now initial target is going to be 1467.1. Sorry guys, I could not give you a limit of 30 pips or 40 pips on this trade, but I'm still giving you two targets. So the first target is 1467.1 and a more meaningful target is 1480.8. As you can see, it appears in both recommendations. So gold is in a very good position to achieve more gains, and I would really like to see that happen. So if you come back later today and you see the price in the 70s or maybe in the early 80s, in the beginning of the 80s, then you know that I will be a very happy man. And I hope that you will be too, because if you follow these recommendations, if you buy at 67.6 and the price gets to 80.8, of course you are going to be happy. So guys, this is it for gold. Now let us switch to another instrument. But I'm going to keep this on the screen for a minute so you guys can copy, maybe screenshot, maybe go to your QTime FX real account and place these recommendations immediately. Whatever it is you want to take the information on the screen, please do. Please screenshot the entry levels, stops and targets, or go ahead to your trading platform and place them immediately. And of course, I'm joining the chat with you guys. Writing comments just like you do. So good luck, guys. Good luck for your gold trades. I am really a bull at the moment. I have several reasons on the chart to support moving to the upside, and I really hope that happens, and I'm ready to take advantage if what I expect happens in the market. And if that happens, I'm going to make some profit and I'm going to enjoy it. And I really hope that you do too, guys. So let's move on to the next instrument. And that is, of course, the pound. The pound, let me see what recommendations we have. Yeah, they are the ones on the chart right now. So yesterday, the recommendations were to buy at 28.79 or to sell at 28.16, but not triggered. Both of them were not triggered because the price moved between the 20s and the 50s all day yesterday. It was a very, very tight range for the pound. Just look at this. Look at this very tight range here in the past 24 hours, from the 20s to the 50s, and that's it. which is very, very small. Does this mean that today is the day where the big move is going to happen? I really hope so, because I'm getting bored, guys. I'm getting bored here. I want the market to move. What I'm trying to do right here is to find the support and resistance that we need for our trading strategy for now. This might be good, but of course I'm still thinking, I have not made the decision yet. The falling trend line from the high seen earlier this week is around 50 right now, while the rising trend line from the lowest price seen this week is around 24. And I'm gonna just push that a little bit to this top here and this bottom here. So this top here is 57. That's why I'm gonna consider my resistance to be at, sorry about that, resistance at 28.57, support at this bottom right here. Let me check what price it is. It is 23. And from here it gets very simple. Of course, once you decide on which resistance and support you are going to use, the rest is very, very simple. So first of all, let me delete yesterday's recommendation or recommendations, because we had two yesterday, not only one. And I'm gonna use entry orders that are only 10 pips above and below these levels. So my buy for now is going to be at 28.67 with a stop at 28.13. Well, that's a reasonable stop, 54 pips. That is very reasonable, right, guys? So what about the targets? Target 1, of course, and target 2. Initial target for this should be in the early 29 area. We came very close to touching 29 earlier this week, but then we started falling again. How about this top here? Or maybe we can calculate. The Fibonacci is exactly at 69. 96, sorry. 96 here. No, I want to push that a little higher, so I'm going to use the 71.4, because last time we touched this Fibonacci level at 96. Now, if we start moving to the upside, of course, we need to look for higher targets. So 29.16, from where I stand, looks like a fantastic target. 29.16. My second target is going to be above the top, and I'm saying this again, just like we said it yesterday, above the top from which this whole drop started. So if we break above this level and we start reaching higher and these retracement levels won't stop us anymore, then we should be trading above the top from which the whole thing started to the downside. And that, of course, is 29.76. October 31st daily high. What when you say 29.76, I need something above 29.76 as a limit. Of course, it is very, very obvious, right, guys? it's the psychological level, $1.30. That is the first thing you think of when you think of levels above 29.76. So 30 immediately. Okay guys, and I'm going to place this in my account, of course, but first I need to see if the price falls. If the price starts falling, what am I going to do? I'm sorry, I need this to be in blue. Now, if the price falls below this trend line right here, I want to be short. So I'm going to sell at 28.13 with my stop above this trend line here. So of course it's going to be 28.67. Now what about the targets? Let's check them out. I remember one target from yesterday, which is 27. It's a retracement level, but I'm going to use that as target number 2. $27,113 pips of a limit, but of course I need a smaller target than that. If I start trading here, I think with the 13 we can talk about retracement levels for this. $82, then, oh, that's very close. How about this bottom, guys? $27.68, yeah, that makes a lot of sense. $27.68, and of course I'm going to color these in red because it's a short recommendation. So now the pound is trading between these two trend lines. The bottom line is this: I want to be in on a break of either once this break happens. So if the break is to the upside, I will not hesitate to go long. If the break is to the downside, I will not hesitate to go short. It's very simple, guys. Immediately I am going to my QTime FX real account and I'm gonna place these orders. Where's gold? I'm watching gold. 66.6. Good. Not bad. But I want more than that. Okay, so buy stop. Let's go back to the chart and check the numbers again. Buy at 28.67. Our stop is 28.13, right? Is it 13, guys? And our target is 29.16. Good luck, place and placed. Okay, so buy at 28.67, stop 28.13, limit 29.16. Now for the reverse of that recommendation, we're going to sell stop if the price drops to 28.13. That would be 10 pips below our support, this support here, and our stop of course is going to be above this falling trend line. That's why it's going to be 28.67, just like the entry for the long position, and our limit is going to be 27.68. Okay, I prefer 27, but I'm going to give you the smaller target, 27.68. And please, guys, so we are ready. We are ready to take advantage of the pound if it moves to the upside or to the downside. Before we depart from the land of the pound, what I really want to do here is, of course, I'm going to leave these recommendations on the chart for you so you can take a look at them. But what I really want to see is how is the or how are, sorry about that, how are the indicators doing on each time frame. And that will be the end of the pound. It seems like I need to use this. Okay, let's start with the daily. So I want to take a look at the indicators, and I'm gonna move these on the side for a little while. No decisive readings. This is a little bit bullish, but it happened a number of days ago, so we cannot really count on it right now. The RSI is around, it's a little bit above 50, so not a lot of help from the indicators on the daily chart. How about the 4-hour chart? Also, they are in the middle, not really giving any signals. The signal was given a long time ago, many candles ago. How about the hourly? The hourly, well, it is a little bit more promising here. As you can see, the stochastics is touching the oversold area, but we did not get our cross yet. So without the cross, that can mean more weakness. But if we get the cross here and on the close of this hour or the next hours, I want the fast stochastic to cross above the slow. When this happens, especially if that happens with a break above this falling trend line, that would be fantastic. So my buying recommendation would be doing great, and it's positioned in a great way to take advantage of such a situation, if in case it happens, of course. I want the price to trade above this trend line. I want the stochastic to cross, and the RSI is already changing direction, which is very good. Everything is on the hourly chart. Everything supports the idea that we are close to what could be a strong rising move to the upside. So we should wait for a cross from the stochastic indicator to confirm what could be a really good setup on the hourly chart, bullish setup. And for that, of course, we need the price to break above two things. As you can see here, we do have the falling trend line from this week high, and we are ready to trade if the market goes above that. At the same time, the moving average band, which is of course getting very, very close to each other because the market is not moving. The market is moving horizontally for a long time now, not a lot of action. The moving average band is very close to the price, and the two moving averages are touching each other, very close to each other. They are both at 43, as you can see. The red one is, of course, the 49. Here you can see it's at 28.43, and the blue one is the 35. It is also at 28.43. So between 43 and 50, and this previous top here at 57, we have a resistance. Once we start trading above 57, I really recommend going long on the British currency. With this, guys, we come again to the end of yet another hour of today's webinar. We still have one break, and after that one break, we are going to have 1 hour left. So it is a great opportunity for me to remind you guys that this free webinar is sponsored by our favorite broker in the whole world, QTimeFX, who is offering you the lowest spreads you can imagine. Beautiful spreads, guys. Very, very tight, very, very small, with zero commission. Of course, here at QTimeFX, we understand that when you offer traders great spreads, you should offer also zero commission, because very tight spreads and then you add commission, you will leave the trading expenses where they were. That's not an advantage. But no, that's not how we do it here. We want to give you advantage. We want our traders to have real advantage. And that is why we are offering you the chance to trade with very, very tight spreads. And at the same time, we are not charging you any commission. Zero commission guaranteed, guys. This is what QTimeFX is promising you. And of course, we are offering you the chance to get $500 in real money bonus, withdrawable money bonus. Not trading credit, guys. It's not a number that we are going to write in your account and then we are going to delete. No, 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 no. This is real money. We are giving you $500 in a free bonus. Real money in your account that you can trade with, that you can withdraw, and God, I hope you do, guys, because I want all my viewers to enjoy trading. And one of the joys of trading that we are offering you here is these $500 completely free, just because you choose QTime FX to trade with. That means we are going to give you this free bonus as a big thank you. Consider it a big thank you from us to you, because guys, we love having you here at QTime FX. And if you need any help at all, if you have any question about our offers, about this free bonus, about how to trade with such unbelievable spreads, please contact us at fx_edugast via Telegram, and we will be there to help you in every step of the way, opening your account, or simply if you have questions, if you want to know more, contact us. If you want to open an account, contact us, and we will help you in every step of the way with a smile on our faces. This is our promise to you. So guys, it has been fantastic so far. We are spotting fantastic trading opportunities. I love the setup that we just talked about on the pound. And with that, we come to the end of the second hour. I'm going to take a short break of 5, 6, 7 minutes, something like that. And I will be back again to talk about more trading opportunities after this break. So see you in 5, guys. Okay, guys, we are back after the short break. How's everybody? Hope you're doing great. Are you ready to make some money today in the market? I know I do, and I have my orders on the euro, pound, and gold already there, waiting for the move in the market, waiting to make some money. Now let's continue. Of course, we still have 1 hour. I want to welcome everybody who's with us since the beginning of this webinar 2 hours ago, or if you have just joined, welcome, welcome. Thank you for being here. On behalf of QTime FX, our favorite broker in the whole world, FX Educast, and yours truly, Munther Marji. Welcome, welcome. We are very thankful to have you with us. And of course, we are going to continue doing what we have been doing for the past 2 hours, which is, of course, looking for trading opportunities in the market. Now, the fourth instrument we'll be talking about today is, of course, the yen. And I like the yen. I like the yen a lot. What we had yesterday was a short position. Of course, we had 2 recommendations to buy above 109.37. And here it is. These are the recommendations from yesterday. They are still on the chart. We had a long at 109.47 because the resistance was 109.37. It's a very, very important resistance, guys. And the good news is that we are starting to fall away from it, which is great from a technical perspective. I want this resistance to prove its importance and to push the price lower. And that, of course, in case that happens, that would be great for me, not only because I have a short position from above 109 and it's making a good profit, not only because of that, but also because that would be a movement in the direction of what the chart is telling me. And I love seeing that, even if I don't have a position. This is how radical of a technical analyst I am, guys. Even if I don't have a position, if I see the market move in the direction the chart indicates, that gives me pleasure. Even if I had 0 position at that thing, I sometimes happen to find opportunities after the market started moving, and I, of course, don't jump in too late, so I let that opportunity go. Even when I see the market moves in the direction expected with 0 position, I still look at the chart, I smile, I feel good about it. So that is, of course, when you don't have a position. But compare that to the situation here where I do have a short position on the yen. I'm very excited about it, and I really think that it can make me some very good profit. Up until now, it is in profit. It is in profit of more than 30 pips, but that's not what I'm looking for, to tell you the truth. I'm looking for something much more than that. So let's see if today we are going to find another support, another resistance to build our trading strategy on. Before we talk about today, what I want to do here is follow up to yesterday's recommendation. Of course, this recommendation along at 109.47 was not touched. The price did not even come close to these levels, of course, but we did trigger this short position at 108.85. And as you can see, right now we are making a profit of about 15 pips. So go ahead and close it. Enjoy these 15 pips, and congrats on that. So we have something between 10 and 15 pips on gold, and something between, or almost 15 pips on the yen up until now. So congrats, kudos if you followed these recommendations from yesterday. All in all, we made 25 to 30 pips. Some, of course, of the instruments were not traded because the price did not touch the entry levels for the recommendations given yesterday, like euro, for example. We had recommendations, but the market did not move enough to trigger these recommendations, and that is why we were flat on the euro yesterday, but not on the dollar yen. We had a short, and the short is currently making 15 pips. Go ahead, harvest these 15 pips, and we will look for another entry point today. So let's hit the charts. Let me delete this one now. As you can see, guys, the drop from the highest levels seen last week. Last week, of course, we touched the 109.37 key and very important retracement. We touched that retracement level and resistance level. In general, it's not only a retracement, it's a resistance level. And from there, we started falling, which of course was 100% expected. 109.37 is such an important level that up until now, after dropping around 70 pips from that level, I still believe that this is only the tip of the iceberg. We can achieve much more than that to the downside. The dollar yen is destroyed, in my opinion, and that will continue to be my point of view unless surprise happens and we break above 109.37. As long as that does not happen, I'm not looking for 50 pips here. I'm looking for a number that is at least 3 digits, and it's not even 100 pips or 150. So maybe 250 and maybe more than that. So I'm talking about great profit potential to the downside on the dollar yen. And everything that has happened in the past week or so confirms that yes, this opportunity actually do exist, and we have a bearish setup in front of us that can help us achieve some serious profit. So this drop is now trying to break below the 50% retracement. 108.68, one of the support levels we talked about yesterday, and another support level that is extremely close to that is the rising trend line from October monthly low, which was seen early in the month, on the 3rd of the month to be exact. This current trend line, is currently running around 108.50. It's a rising trend line, of course. Every hour or so it's going to go up a pip or something like that. So at the moment, I'm going to consider it to be at, let me see, what's this low right here? It is 49. Okay, so support is between 49 and 68. I'm going to write that down for you guys. Support 108, 49 to 68. This is a support area that I'm really interested in. I want to see the price breaks this support area. That would be fantastic. If we start attempting to break this area, I would be watching the chart, looking for confirmation of a break in order to initiate a short position. Honestly, on my account, on my real account, I do have a short position, and currently it's in more than 30 pips of profit. So I will not be adding to that, but I'm talking about you guys who do not have a position on the dollar yen. You can initiate a short position once this support gives way. What about resistance? Of course, the resistance is that's absolutely obvious. That resistance is at 109.37, and yesterday and the day before I gave it 5 stars. So it's a 5-star level in my opinion. It's a very, very important level for the whole pair, for trading, for the short term and even the medium term. This level will affect how the dollar yen behaves for a long period of time. As long as we are below it, then weakness should be expected, and I'm talking about serious weakness, and something like 300, 400, 500 pips, or even more than that, not 50 or 60 pips. Okay, but in case the surprise happens and we break above 109.37, I will stop believing in this collapse theory, let me call it. Collapse theory. The dollar yen is set to collapse, to completely collapse to levels, or at least at 104 and maybe even below 100 at a later time, given enough time, of course. So 109.37 is the single most important resistance for the time being, and I love that level. I have been watching it for a long time. I'm going to show you in a minute why I really believe that this is such an important level. But at the time, I want to tell you that both our orders to buy gold and euro are now triggered. Let me just take a quick look, only a minute. As you can see, gold has found support. This is 5-minute chart on or at or inside the moving average band. From there, we started moving to the upside. Our long order, the order to go long, to initiate a long position, is now triggered. Same with the euro. As you can see, the euro is doing good. It has been doing good for an hour or so. Yeah, look at this, guys. After testing the 95, look what happened. We said that 95 is the support that we need to keep our eye on. And now look at this. The low is here, 92. The current daily low is 92, and we are already up almost 25 pips from that low in an hour or so. And this is only the beginning. This is only the beginning. As long as 109.95 does not give way, this is only the beginning. Same with gold. This is only the beginning, guys. This is only the beginning. The market is moving as expected. I'm very happy for that. And I really hope this goes on, because the past few days have been extremely boring. You know, you think the market will move, and yes, it starts moving, but then again, it's only 30 pips or so. It's in the right direction, but it's not very exciting because the move is small. I really hope that today will be different. I really hope that we're going to see 1480.8 on gold, our limit for this long position, and higher levels on the euro. I think we have, yes, our limit is 1063. I really hope we get there later today, 1063. Okay, guys, so back to the dollar yen. With this being said, of course, 109.37 is a bit far from 108.49. If I want to place my stop 10 pips above 109.37 for a short that is opened 10 pips below 108.49, then my stop will be more than 100 pips. That's why I'm gonna look for you guys for a closer resistance level to count on. But even when I do so, I really want you to understand the importance of 109.37. It is definitely, hands down, the single most important resistance for the time being, without competition. But for risk management purposes, we are going to use a closer resistance. Of course, trend lines can be extremely helpful in what we are trying to do here. We are trying to find a level that, if broken to the upside, we need to admit that, well, our short position is not going to do well. One of the most important levels in this assignment is the falling trend line from November 8th high last Friday. The high we have seen, it was an attempt to break above 109.37. Of course, that attempt failed because it's a very strong level that survived the attacks. And from there we dropped. Now this trend line, which is falling from last Friday high, is running around 109.08. Now, another tool that I'm going to be using is the retracement level for the whole drop from recent highs until current levels. I'm going to use the 50% level. Just look at this, guys. Look how close this trend line is to the 50% level. And that, of course, encourages me to use the 50% level at 109.05 as another resistance. Initial resistance. This is what I'm going to call it. 109.05. Well, with this, yes, we can make we can create a trading strategy with a reasonable stop loss that is not above 100 pips. So what I want to see here is the price breaking below this support area. If that happens, of course, I'm going to initiate a short position with a stop above 109.05, but I'm not gonna initiate a long position above 109.05. I'm only going to initiate a long position in case a huge surprise happens and we break above 109.37. Aside from that, I don't want to be long dollar yen. Okay, I have every reason on the chart to believe that getting a long position is not really a very good idea. So I don't want to be jumping in on the reverse very soon, only with a break above our 5-star resistance 109.37 that we are going to be long in this market. So with these levels in my hand, now I can start building my strategy. Let's go with the short first. Of course, it's my favorite. It's definitely my favorite position for today. Not the long, but the short. So sell or short. Well, breaking 68 by itself, in my own opinion, is a reason to go short. But we need also a break of the trend line. Now, in the middle between these two levels, we have the current daily low or the Asian session low, 108.60. So, of course, this is a rising trend line. In the next few hours, every hour it's going to go up a pip or something like that. So in the next few hours, instead of 49, it's going to get closer and closer to 60. And that is why I am really going to use 60 as a support inside this area between 49 and 68. I would pick 60 as the support that, if broken, I am going to sell the yen. And 10 pips below 60 means a short at 108.50. My stop needs to be above 109.05. 10 pips above that, 109.15. That is enough for me. So 65 pips and stop. Of course, that's much better than having 110 or 120 pips of a stop. Okay, guys, so what about the targets? Target 1 and target 2. Target 2, we talked about this yesterday. It is 104.40. It's a very, very ambitious target. Where do we find this target on the chart? Let me show you. It is the bottom from which this whole recovery attempt started. And the logic, let me delete yesterday, recommendations and support and resistance. Yes. The logic behind this, guys, is very simple. When we recover only to find resistance and failure around a retracement level like the 937 level, this makes it much clearer. If we recover and then find resistance around this level here, 109.37, then this is a corrective pattern. Recovering from a bottom only to find resistance very close to one of these key retracement levels is corrective. So if this is corrective, if this whole move is only correction, that means the odds of it trading below the bottom from which everything started, which is 104.45, are huge. So that is why we have a second target. That's a crazy target, of course, at 104.40. I do believe we have a very good chance of getting there, with one condition: not to break above 109.37. If we don't break above 109.37, I'm going to keep defending this crazy target. It's very far, very large, but it can be attained. Now, for the first target, of course, I'm going to give you something much, much more reasonable, much closer. I think yesterday we said that the 88.6 retracement at 108.06 makes a good target to the downside because it's very close to the previous bottom, of course. And at the same time, when we started to recover, we found resistance around it here, here, as you can see. So I'm going to use 108.06 as my limit. 44 pips, yeah, that's the kind of target that you guys like and ask for. So this is my recommendation for the day. Okay, now I'm gonna go and give you another short recommendation in case we do not drop to 50, in case we start recovering first before we fall again. I'm gonna delete these so you can see clearly. If we start moving to the upside, guys, obviously there's a resistance around 109.05. The 50% level for the rising trend line. Sorry for the falling move is 109.04. The falling trend line is extremely close to that at the moment. It's only 4-5 pips above it, something like that. So I'm going to use 109.05 as a resistance, and if we get close to this level, I would recommend a short. So not only shorting if we drop to 108.50, I want to short if we go higher towards 109.05. Now with getting in at 109.05, that would make it much easier to place your stop above our key and star resistance level at 109.37. I'm going to use 20 pips above that, not 10. So my stop is going to be 109.57. Yeah, 52 pips of stop. And my limit or target 1 and target 2. I'm still not used to using the word target. I always use limit, but when you have 2, you need to give target instead of limit. So target 1, if we sell at 109.05, a drop back towards this bottom should be enough for us, which is 108.60. I know you guys like your 40 pip targets, something like that. Target 2 needs to be much lower than that, and even below here, below 107. Or let's call it this bottom. 107.87. Of course, on the longer run, target is going to continue to be 104.40. But for short-term trading, if we sell at 109.05, the limit is going to be 108.60. And if you want to, if you are feeling lucky, then you can wait until 107.87 for a larger target. So 2 short positions, guys. No long recommendations for now. The bearishness is all over the chart, and that's why I really wouldn't prefer to have a long position at the time being on the dollar yen. So let's summarize. The next support, since we started falling, of course, we broke below support levels like 108.95 yesterday. Next support is the area between 108.49 to 68. Inside that area, I picked 108.60 as my level for now. Resistance is definitely 109.37. It's the most important resistance level for the time being. But for risk management reasons, we looked for a closer resistance to place our stop above. We found that 109.05 makes a very interesting resistance. So we are going to sell if we break the support or if we go up to the initial resistance. If we break the support at 60, that means we are going to short at 50 with stop above the initial resistance at 109.15 with a target of 108.06 and another target, the longer run target at 104.40. Now, if we start rising, instead of touching 108.50, we start rising and we touch 109.05, also that's a sell. Sell at 109.05, your stop is 109.57, your target is 108.60 if you prefer small targets, but if you want to wait more, if you feel lucky, if you feel that the chart is supporting larger targets, and actually it is supporting, and it does support these targets, larger targets, what we expect for this pair is very bearish. So if you want to use 108.60, it's okay. If you want to use 107.87, it's okay. And on the longer run, of course, we are dreaming about 104.40. So this is it, guys. This is it for the dollar yen. Now, what about the Aussie dollar that we talked about yesterday? Gold is beautiful, guys. We are already above yesterday high. We are reaching a level that has not been seen for a number of days. Yes, since the 8th of the month, 6 days. So we are already at a 6-day high. I love that. I love that. And I really believe this is only the beginning. Okay. Well, yesterday, the recommendation, of course, it was, I remember it, I was looking at the chart trying to find it, but I do remember it. It was along at 69 figure or short at 68.06. Up until the closing of the European session, either was touched. So we were flat on the Aussie dollar yesterday, but during the Asian or Australian session, if you want to call it, we did break below the support and we triggered the 68.06. Of course, we delete our and we cancel our orders. We don't keep them overnight. That's why we are still flat. If you did not cancel your order, you would be now in a profit of about 10 pips. So you can close that and put them in your pocket. But if you canceled the order, then kudos to you. Thank you very much because you followed my instructions. My instructions are very simple and obvious. By the close of the European session, any orders that are not triggered should be canceled. So what's next, guys? What is next for this instrument? Let's see. Of course, breaking below this trend line. As you can see, it came in a sharp way. I suspect that we had some kind of news affecting this, but I was, of course, sleeping at that time. I don't know what happened. This is very, very late in my time. This happened very late, I think. Yeah, this is 1, 2, 3, 4, 5, 6, 7, 8 hours ago. It was around 3 a.m. my time. So I'm sorry, I was sleeping. I don't know what caused this sharp move to the downside. Nevertheless, as a chartist, what I care about most is that we broke below the rising trend line. Maybe on a 4-hour chart, it would be easier to see. This is it, guys. You can see this trend line, 1, 2, and 3 touches, and then boom, we broke below it. So now with this break, of course, we should expect the market to continue moving lower, but for how long? We already touched the 50% level at 68. Now the next retracement is at 67.70, which is only 18 pips below the current daily low. So more weakness should be expected, but with breaking this trend line, I find it very hard to find the next meaningful support. Of course, we can find support with the retracement levels, but which one is the one that we need to use to build our trading strategy? It's not very obvious, to tell you the truth. The only thing that I really can say here is a retest of this trend line should be viewed as a shorting opportunity, while breaking above it should be viewed as an opportunity to go long. And with that, of course, I'm gonna initiate my recommendations on this pair with a short. Currently, this trend line is around 27, 68.27. So I'm going to use two resistance levels, 68.27, and I want to see, of course, this falling trend line here. Currently, it is at 80, but of course, we're going to get lower with time. Let's consider it 80. It's not very far. Another resistance is at 68.80. So what looks like a good trading strategy for now is this, guys. If the price reaches 27, we sell with a stop above 80. What do you think about that? I really think that is okay. Sell at 68.27. Stop above 80, because this is not a volatile instrument. 10 pips is enough. 68.90 is enough. Our targets, target 1 and target 2. Well, if we sell here, of course, we already reached the 50% retracement level, then we should aim for the 61.8, which is at 67.70. So 67.70, that's a good target. Now, the second target should be at the bottom from which everything started, which is 66.68. And boom, there you go. This is our first recommendation for the Aussie today, and I am going to issue, of course, a reverse, and the reverse is a buy. I'm gonna use the blue, of course. Color codes make it easier, I think. I want things to be clear, so I use colors, I use everything to make things clear, so you guys don't make a mistake of maybe getting in on a long instead of a short or something like that. Okay, guys, gold is approaching 1470 for the first time in a week. Go! I'm very happy about that. Okay, so the second recommendation should be a reverse buy at 68.90, stop at 68.27. I like to have these kind of relationships between the two recommendations. Each entry is a stop to the other and vice versa. Target 1, target 2, so we are set with the entry and stop, but we don't know about the targets. Initial target, if we find support at 61.8, or if we break above this one, or even if we start rising from the current test of the 50% retracement level, in all cases, we should be able to trade at least to challenge the stop here, if not overcome it. And this high is 69.30. So that would make a beautiful initial target. From yesterday, I remember we have an important resistance at 70.05, and I'm going to use that as my second target. So there you go, guys. For the Aussie, right now we have two resistance levels that we are interested in: 68.27, 68.80. What looks good to do is to sell at the first resistance with a stop above the second resistance. And if we do so, of course, we will be waiting for the price to drop. In case we break above the second resistance, we will initiate a long position. So to make that into a trading strategy, our short is at 68.27 with the stop at 68.90. The stop at 68.90 is a reverse. So we go long at 68.90 with a stop at 68.27. Initial target for the short is 67.70, that is 57 pips. But we do have a more ambitious target at 66.68. Our long position, of course, at 68.90 has a limit, an initial target of 40 pips at 69.30 and a more ambitious target of 115 pips at 70.05. So this is it for the Aussie. Thank God we have some time to talk about a sixth instrument, because every day for this week we were doing 5, 5, 5. I was trying to make 6 today, and one of the things that I really want to talk about, I have not talked about it yesterday or the day before, is the Canadian dollar. And with the Canadian dollar, of course, I'm going to start from scratch. I'm going to start analyzing this thing from the beginning. Now, the overall situation, if you have seen, maybe with the exception of the Aussie dollar, when we analyze euro, yen, and gold, the analysis of these three key and very important instruments was in the same direction. All of them pointed to dollar weakness. So can we see this here? Can we see dollar weakness on the dollar Canadian? I am really interested to know that. And I have not taken a look at this chart for maybe 48 hours or so. I was very occupied with gold and euro yesterday, especially with testing 109.95 and with gold testing a Fibonacci level at 1446. That was where my attention is. Now, the Canadian dollar is one of my favorite instruments to trade, even though for the past 2 or 3 days I have not traded it. Let's see what the chart says here. Well, first of all, the first thing I note on the daily chart is this. This is the first thing that catches my eye. And before I continue talking about the Canadian dollar, I want to say hi to Sira Kadam, a fresh new name here. Thank you for being here. You must be one of our subscribers. We had a jump in the number of subscribers this week, which made me very, very happy. I'm very happy to have you with us, guys. I'm really, really glad. Just as I am glad with seeing the price of now, as you can see, guys, it is 1470 already, and this is only the beginning, guys. Our limit is at 80.8. Keep your fingers crossed, we're going there. So Sira, you came at the right time to see these amazing trading opportunities. It has been a wonderful week so far, and I really believe we are going to end this week on a high note with good profit, great results, and I really, really want you to be there tomorrow to see with your own eyes what happens to our recommendations. So you guys, the first thing I see is this one. Okay, this is the first thing, an attempt to break. The fast stochastic is trying to push below the slow stochastics. And now another is that the RSI is just touching the overbought area. Actually 71 right now. Of course, the overbought area is at 70. That's the default number. Other numbers can be used, but 90% of analysts use 70%. I know that other numbers are used, but we don't want to talk about that right now. We want to talk about the default number, which is 70%. So we are touching the 70%. We are at 71 now, which indicates that maybe it is time for this whole recovery attempt to just give up. But for that, of course, we need to do more analysis. One of the bullish observations, of course, these both observations on the stochastic and the RSI are both bearish. But here, the cross of the MACD is bullish, although it happened more than a week ago, so it's okay. We cannot say that this is fresh information. It's not new news, so it is okay. Maybe it's outdated. We can forget about it. But another thing is, which was happening almost exactly at the same time of the cross on the MACD is a cross above the moving average band. So we have two bullish observations and two not bearish but potentially bearish observations. Up until now, we have more than one option that we can go with. We don't have strong observations that are pointing in one direction, like with the case of gold or the yen, for example. Very obvious chart statements there, but no, it's not the same here. So we need to continue doing more analysis in order to see what is going on this pair. For that, I'm going to switch to the 4-hour chart. 4-hour chart, MACD, this is flat, this is not helping, but if the MACD itself starts to get further away from the signal line, then that would be good for the bearish possibilities. RSI, we are already in the oversold and down, although the price is not confirming that, which is good, of course, because indicators can move below and start falling before the price, and that is very bearish. It's some kind of divergence, of course, and you know divergence has a very great track record of reversing market movements. So if the price here attempts to reach a higher high while RSI does not, that is not bullish. That is extremely bearish. However, another observation to add to the confusion is this. Look at this, guys. We have penetrated, of course, the moving average band late last month. For the past 2 weeks, we have been trading above it. This is bullish. So it is really confusing, and I'm very happy, guys, that you are here to see this, because not every time we open the chart and it's clear cut, very obvious setup. Sometimes you get bullish and bearish observations, bullish evidence, bearish evidence, bullish signals, bearish signals on the same currency. And that, of course, happens. When it does, if it's really a tie, then you just let the market do whatever it wants for a while and don't get in very early, okay? Wait for more signals that will make things clearer for you. So up until now, honestly, I cannot say that it's going one way or the other. What about the daily, the hourly chart? We talked about the daily, we talked about the 4-hour, and now the hourly chart. It is a little bit more encouraging. Look at this. We are finding support at the average, and we are starting to move higher. Well, maybe, I want a ray, I want a line. Maybe if we break above this resistance here with finding support very close to the moving average, putting these two together can point to the upside, of course, and it can be a reason for a long position. Well, okay, that can happen, of course. Now, I want to go back to one thing on the daily chart. What I really wanted to see is this. I wanted to see if the retracements for this move can tell us anything about where the market is going. Okay, I'm gonna try my luck with the 71.4 and boom. Boom, 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 boom. Okay, enough of the indicators. Let's focus on the retracement levels. 32.59, guys, is the 71.4 retracement level for the whole previous move. And another observation is this. Well, that indicates that we have an important resistance at 32.59. If we break above this resistance, a long position will be justified. But if we continue to trade very close to it and fail to break above it in a clear and clean way, then a short position will be justified. And in this situation, with all the confusion we have seen on all time frames, what I really prefer is just to keep this in mind for today. I don't want to issue recommendations for the Canadian today, but I will keep this chart in front of me. I'm gonna check what will happen to it in the next few hours in order to try and find a clearer indication of the direction, because up until now it can go either way. From what I saw on the hourly, 4-hour, and daily chart, it can go either way. But there's a possibility that this pair will follow the path that gold, euro, and yen are following or going through, and that is the path of dollar, American dollar, that is, American dollar weakness. So for now, I'm going to keep this possibility in my head. A failure to break 32.59 supports all the analysis that we have been doing up until now. Everything is pointing to dollar weakness. However, a clean and clear break above 32.59 will of course indicate the exact opposite. That will indicate that the dollar will continue to move to the upside, at least against the Canadian dollar, its neighbor. And that's why I'm not going to issue recommendations today. I'm going to keep this as a potential setup. I'm not going to say anything about it today. Maybe 24 hours from now, when we talk about it tomorrow, we will have a recommendation for you. So guys, with this, we come to the end. I can't believe that it's already 3 hours. It has been a pleasure having you all. Thank you very much for being here. Thank you for your interest in my analysis, in FX Educast, and of course in our favorite broker in the whole world, QTimeFX. Guys, QTimeFX is the broker that gives you the opportunity to trade with fantastic spreads that are really, really tight and really, really small. Imagine yourself trading the euro dollar and the dollar yen with only 0.4 of a pip. Only 4/10ths of a pip, guys. That means if the market moves 1 pip, then you are already in profit. That is a fantastic way to trade. This is my opinion, and that is why I recommend you open your account with QTimeFX. And of course, guys, we have said this before, and I'm sure if you have roamed the internet looking for a broker, I'm sure you have noticed that a lot of brokers offer you great spreads, but they charge you commission. So when you find a broker that is doing just that, just ask them, what is my benefit when I trade with tight spread when you charge me commission? That is like trading with a spread that is not very tight. It's the same thing, because spread and commission are both parts of the trading expenses that I, as a trader, have to pay. So if I save on the spread and still pay commission, what's the use? And you are right about that. There is absolutely no use of paying very low spread while paying commission. So that's why at QTimeFX here, guys, we offer you the chance to trade with fantastic spreads, and at the same time, we will not charge you commission. We want you to be successful. That's why we're offering you very good trading conditions, and that's why we are here every day trying to find the best trading opportunities for you, so you can trade, you can make money, and you can be happy with us. And of course, we want our clients to be happy. And QTimeFX are doing, the guys are amazing. They are doing everything they can to make trading easier for you. And they got me here. You know, guys, getting a CMT with 19 years of experience to talk to you every day about opportunities in the market, it's not free. You know that. It costs a lot of money. And they got me here because they care about you. They said, Munther, go and give these guys the best opportunities that you can find in the market. We want them to make money. We want them to be happy trading with us. And that is, of course, what we are trying to do here. And I'm very happy to be a part of this. That's why I always recommend opening your account with QTime FX, our favorite broker in the whole world. Here, I'm talking about myself, of course, about FX Educast. We love QTime FX. So go ahead and contact us at fx_educast via Telegram, and I assure you that we will be here waiting for you with a smile on our faces, and we will be very happy to offer all the assistance that we can in order to make trading experience very enjoyable to you. And that starts, of course, with help opening the account, and after that we are going to continue giving you the best trading opportunities in the market and trading conditions that are very, very enjoyable, from spread to commission to the big bonus that we are giving, $500 bonus, guys, to each and every one of you when you open your account through fx_educast. And the good news is that this is not a trading credit, guys. A lot of companies give you trading credit. It's only a number in your account. You cannot withdraw that. But no. That's not what we are offering here. We are offering real money, $500 of green American money, okay? And the magic word here is withdrawable. It is an amount that you can withdraw from your account when you trade with the QTime FX. So what are you waiting for? Fantastic spreads, zero commission, a very generous bonus, and every day we are here trying to point out the best trading opportunities in the market. We are doing everything we can to make you some money and to make you successful in this market. So all you have to do is to contact us at fx_educast via Telegram, and let us help you open your account. Let us help you make money in this market, because that's the bottom line. We want you to be successful, because when you are successful, QTime FX, FX Educast, and the Munther Marji are successful as well. Your success is our success. We are a team. We are working together. We're not working against you. We are working with you, for you, and that is why we would love to have you make profit, make money, and trade with the best trading conditions available. So guys, contact us at fx_educast via Telegram, and we will be extremely happy to help. With this, we come to the end of yet another exciting webinar, another exciting day in the market. 21 hours from now, we are going to meet again, of course, and we are going to talk about the opportunities that we talked about today. We're going to follow up to that and look for fresh opportunities for the last day of this week. So be here 21 hours from now, guys, the same time every day, and we will be here together as a team to achieve some kind of success that will make you very happy, that will make you the kind of trader with a smile on their faces, not the trader who is always complaining about the market. And I'm here to do just that. So see you again tomorrow, guys. 21 hours from now, again, I will be here. Love you all. Have a great day in the market. And as I always sign off, good trading and good luck. Bye-bye, guys.